It's time for the Your Personal Bank Show with Ference Toth, financial literacy educator and speaker, entrepreneur, and chairman of the board of a bank in formation. Take charge of your financial future with Your Personal Bank. Now here's Ference Toth.
Welcome to the Your Personal Bank Show. Well, as you know, by now, of course, the Inflation Reduction Act that we were very, very much against on this radio show has been passed and signed by Biden. And we were against it for many, many reasons. First of all, first and foremost, it's not an Inflation Reduction Act because even Senator Joe Manchin, who co-authored this boondoggle, admits now that it's not going to reduce inflation. The Congressional Budget Office, the Wharton Business School, many other studies show that this is going to do nothing at all, really, to reduce inflation. In fact, the majority of the money goes to green energy incentives, of which we already have plenty, more than enough already. But, that's a whole nother story. It's not just the inflation, this particular act that's now a law. Oh, and the other big one is doubling the size of the IRS and doubling their budget, including hiring 87,000 new IRS agents, will entail more audits, more harassment, etc. from the IRS, which is obviously something I don't think any American wants. So it's a bad bill all the way around. I think in my last show, I even shared my theory on why this was shoved through and passed over and above, the Democrats just, their desire to spend money knows no bounds. In fact, over the last, year and a half or so since Biden's been in office, they've actually spent now about $3.8 trillion over and above the normal budget. I mean, that's just going to continue to exacerbate inflation. I've said this repeatedly on this show. Until you address the root cause of inflation, which is excess spending, is one of the biggest things, excess government spending, you will not see a reduction in inflation. And then the inflation effects will linger for quite some time. Frankly, likely years. So they just keep spending. So that's a big reason why I was against it. You don't spend money when you're in a recession and you have historically high inflation. You don't do that unless you want to intentionally, financially harm people. You want to inflict economic damage to the average American. And I believe that's what this administration wants to do. I mean, they've stated it themselves so often, so repeatedly, that they want to fundamentally transform America. Well, they're doing their darndest, aren't they? They're putting forth their best effort. And please understand, we have a midterm. What's truly amazing is their midterm elections are coming up soon. And they think that the American people are so stupid or so blinded that this won't hurt them. Obviously, their election chances. Otherwise, they wouldn't have done it, I believe. Now, I sincerely hope that they are dead wrong on this. That they get a reckoning and people do not forget who caused all this economic pain, who caused all this spending and inflation that affects literally everybody. Look, I don't care if you pay taxes or not. I don't care if you earn income or not, or invest or not. You are affected by inflation because everyone eats. Everyone has to have a place to live. Everyone pays, or nearly everyone, we'll put it that way, pays for, there's a cost to live, right? Now, I understand there's some people that are on the government dole, and that is part of the problem. And that's, I guess those are the ones that are going to vote for this income redistribution is what it is. and power and control the Democrats so fervently crave. If you can't sense the disappointment and frustration in my voice, you're not listening. It's I've been a financial fiscal responsibility, particularly for government, for decades. And when you see an administration spending $3.8 trillion over and above the normal $3 to $4 trillion they already spend, which is frankly way too much, and spending on many things that I I strongly disagree with, wasteful in many cases, I feel and believe, and counterproductive, and just in fact, in many cases, just outright destructive to average Americans, to people in general, just so these corrupt politicians and bureaucrats can retain and maintain power and control and money. I find it evil and sick, and it's incredibly frustrating. But since this is passed, this Inflation Reduction Act, which has nothing to do with reducing inflation, all it has to do is about spending more money and then arming the IRS, an army of IRS agents, to then try to collect more money, squeeze more money from the American people. And folks, if you're under the delusion that the IRS is just going to go after the wealthy, I've got a bridge to sell you in Arizona, because the numbers don't add up. Even if they did that, the numbers that they're wanting to collect, the numbers are not there. They're coming after the middle class, folks. They're coming after the small business owner, and those people are going to have to. I've seen comments on this where they say, well, if you're not cheating on your taxes, they're not going to bother you. That's a total and complete fallacy. The IRS has much history, I'll put it that way. And I've worked with many clients over the years who did nothing wrong. The IRS got it. They got it in their, somehow got into their crosshairs and decided that they were going to come after them or audit them or whatever, because they thought they could, squeeze more money out of them. Let's be real. Because what's one thing the IRS is really good at doing? Well, it happens to be intimidating people, right? And the thing is, for the average American, for the average small business owner, you only have so much bandwidth. You only have so much time and energy to run your business, to live your life. And you don't necessarily have the time, energy, or the money to hire the experts, the attorneys, the CPAs that you need to protect yourself from this, okay? From this, harassment is what I've seen in many cases. I say, one of the most recent studies from the IRS showing that 73% of audits actually targeted working Americans below the threshold that Biden put out there of 400,000 income. Okay, their own record shows is total BS. And in fact, when they were talking, they're putting ads out already now for IRS agents, and in one of their requirements is the willingness to use deadly force. That doesn't sound like someone's going to nicely, approach you about, hey, we think you might owe some more taxes. No, letters I have clients I deal with on a regular, I've done for 20 plus years. And it's particularly small business owners where they'll file their taxes, they'll pay them and do what they're supposed to do. And then they'll routinely, and I mean routinely, get letters saying, you owe this, you owe that, you owe this amount, you owe that amount. And it's a very common thing. And then they got to go to their CPA or whoever and figure out why the IRS thinks suddenly they owe them more. In fact, there was again, on one of the more recent, how should I say, audits of the IRS, okay, from I believe their own inspector general, points out that something like 17 million letters went out in the last couple of years. Here it is. Where they were improper, or they had letters stating that they owed money, and all this kind of thing. Yeah, here it is. These IRS sent out nearly 100,000 threat letters demanding tax payments even though none were due. Okay? 17 million unprocessed tax returns in recent performance audit of the IRS. Nearly a third of earned income tax credits last year were improper. Okay? And nearly a third of the education tax credits were improper. And 13% of enhanced child credit, over $5 billion, was improper. In other words, the IRS is extremely inefficient, but they're extremely good at intimidation. And so they understand that if they send a nasty letter, or sick an IRS agent, or do an audit or threaten an audit, in many cases, the person or the business is just going to end up paying the money to get them off their back, which basically means they collect more money. And folks, that's nothing more than extortion. And here's my hope, my fervent wish, is that people remember who voted for this. It was all Democrats and no Republicans. I hope and pray that they do not forget this, and that these Democrats and this administration and these politicians that are currently in charge realize they did this because they thought they could get away with it. And I hope they're sorely, sorely disappointed. I hope that Americans rise up and vote them out of office, because this needs to change. The bureaucracy is too large, too big, too powerful, and is infringing on trampling our rights left and right, and is preparing to smash them to smithereens, folks. And then the people that are in charge, who have stated repeatedly they want to fundamentally transform America, will actually have accomplished their wish. We still have a chance to stop all this. None of this actually has to be funded, but we have to get people in office that will not only not support it, but actively fight against it. We need fiscally responsible representatives. And none of the current Democrats in Congress are fiscally responsible, because they voted for this particular boondoggle. Well, folks, this also means taxes are going up. So you need to create a tax-free bucket of money more than ever. So contact me at yourpersonalbank.com. Again, it's yourpersonalbank.com to create a tax-free bucket of money to give you options.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. And in the last segment, I was sharing a lot about my frustration, my extreme frustration, that the quote-unquote Inflation Reduction Act was passed and signed into law by Biden. It will increase taxes on everyone, every income bracket. It will increase taxes on large businesses, which of course means the businesses aren't going to have a tax increase. It'll just increase the cost of goods and services that are then sold to us. The $3.8 trillion that the current administration has spent since Biden came into office is just nothing more than fiscal suicide. This is money we don't have, folks. And that's on top of the $3 to $4 trillion a year they spend in their normal budget, which is frankly far too much already. So in other words, they just about almost doubled up. And that's after all the COVID relief stuff previous to that was done too. The amount of money that is floating in the system, I hate to be such a pessimist, but because generally I'm not. I'm usually an optimist, and I'm very optimistic about things. But from a financial standpoint, I can't see any good coming from this. This has got to stop. And the fact that they were able to pass another $700 or so billion spending spree boondoggle, most of it going to green energy stuff, enhancements, less than 90 days before a midterm election, either these people got extreme cojones or they just don't believe it's going to impact them negatively in the midterms. Now, I think they're wrong. And I sincerely and fervently hope that they're dead wrong. Because that's another thing I want to bring up. We've been hearing recently how in the polls, because of these quote unquote wins, the media has been trying to, the legacy media has been trying to tell us that the Democrats' hopes in the midterms aren't as bad as they were. You know, hold hope, folks. Stand firm, because the polls have been extremely wrong for the last number of cycles. And pretty much in every time, consistently wrong in terms of being in favor of the Democrats when they really weren't. We're going to find out pretty soon in the midterms what the American people really think. I think the biggest thing that's probably important, and what I point to, is over 75% of all Americans, that's all Americans, believe the country's headed in the wrong direction. And I think that, in and of itself, is probably the best indicator of where people are going to vote and where they're at. I think they're going to get shellacked. We're going to see. We're going to see. But a few other things. I guess the biggest thing I should say about this Inflation Reduction Act is, it's going to, like I said earlier, it's going to raise taxes on literally everyone, folks. And you're going to have more IRS enforcement by a doubling of the budget for the IRS. They're going to be hiring new agents, more enforcement, more audits, which means likely subject to more taxes, penalties, or anything else for that matter, whether or not you did anything wrong, whether you filed your taxes on time, paid them or not. Particularly your self-employed person is going to be affected by this, your business owner, because they have deductions, business deductions, legitimate tax business deductions, that the IRS, when they come after an audit, I've seen this many times with many clients, when they try to get a business, for example, on do an audit and want them to collect more money, and when they can't find anything wrong, they'll just disallow business expenses, whether the business owner has receipts or not. I've seen it firsthand, folks, multiple times. They have to justify their time they spent on this business. And when they're wrong, they thought they were going to get more money out of this business, and they find out they're wrong. Again, the auditor, with little or no explanation, can just disallow expenses. Or say, you have these expenses, but I'm only allow half of them, or whatever it may be, which then causes that business to have to pay more in tax. And it's typically affects small business owners because they don't have the time or the money or the sophisticated lawyers and CPAs to defend them from this, and the IRS knows it. So they end up just having to pay it, more or less, in most cases, to make it, quote unquote, go away. Folks, this is no different than extortion. This is Gestapo tactics. This is a country where we are supposedly innocent until proven guilty, but with the IRS, it's the opposite. You have to prove yourself, you're guilty, and you have to prove yourself innocent. And I've seen oftentimes, even when you do, they still don't accept it. And that's the sad reality. And when you have more agents, more enforcement, you're just going to have more of that. It's common sense. I know that's lacking in this world, but it's just common sense. And one of the best things I think you can do is reduce your how should I say, your not your overhead. I was trying to think, good thing to do with a business, but reduce your target, right? In other words, create some more tax-free income. They can't attack that. Your personal bank accomplishes that, folks, by having more of your money, or redistributing more of your money into a tax-free bucket. Gives the IRS less ability, the federal government less ability to collect taxes or more taxes on you, or if you are audited or whatever, that is something that they just can't really go after. And the way our federal government has been spending money for the last several years, like an entire drunken Navy, not just a drunken sailor, but the entire Navy, okay, going on a spending spree unlike the likes we've seen in human history of any government of any time ever. That's the significance of this, folks. I'm not trying to sugarcoat it with you, but they've spent more money than any government has in history. We now have more debt as a government, as a people, than any country in the history of mankind. What is going to happen to our tax rates? They're consistently talking about having people pay their fair share. And many people foolishly believe that means it's just going to be the rich. Folks, that's where it starts. Then it moves to the middle class. And as even in this last recent IRS audit, performance audit, 73% of audits done in the last couple of years were done on middle class and small business owners. Folks, don't be a fool. Don't believe what the IRS and the federal government is trying to say. Have some healthy skepticism. Where I know there's a lot of people that haven't, I like myself, but we really need to develop that skepticism of what the government tells us is like what a slimy used car salesman is like. I'm coming up on a hard break. I'm going to encourage you to contact me at toll-free 866-268-4422 or yourpersonalbank.com to create a tax-free bucket of money and reduce your target in terms of potential taxes going forward, because it's just getting worse as they spend more. Stay tuned.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. And in the last segment, I was sharing a lot about my frustration, my extreme frustration that the quote-unquote Inflation Reduction Act was passed and signed into law by Biden. It will increase taxes on everyone, every income bracket. It will increase taxes on large businesses, which of course means the businesses aren't going to have a tax increase. It'll just increase the cost of goods and services that are then sold to us. The $3.8 trillion that the current administration has spent since Biden came into office is just nothing more than fiscal suicide. This is money we don't have, folks. And that's on top of the $3 to $4 trillion a year they spend in their normal budget, which is frankly far too much already. So in other words, they just about almost doubled up. And that's after all the COVID relief stuff previous to that was done too. The amount of money that is floating in the system, I hate to be such a pessimist, but because generally I'm not. I'm usually an optimist, and I'm very optimistic about things. But from a financial standpoint, I can't see any good coming from this. This has got to stop. And the fact that they were able to pass another $700 or so billion spending spree, boondoggle, most of it going to green energy stuff, enhancements, less than 90 days before a midterm election. Either these people got extreme cojones, or they just don't believe it's going to impact them negatively in the midterms. Now, I think they're wrong. And I sincerely and fervently hope that they're dead wrong. Because that's another thing I want to bring up. We've been hearing recently how in the polls, because of these quote-unquote wins, the legacy media has been trying to tell us that the Democrats' hopes in the midterms aren't as bad as they were. Hold hope, folks. Stand firm, because the polls have been extremely wrong for the last number of cycles. And pretty much in every time, consistently wrong in terms of being in favor of the Democrats when they really weren't. We're going to find out pretty soon in the midterms what the American people really think. I think the biggest thing that's probably important and what I point to is over 75% of all Americans, that's all Americans, believe the country's headed in the wrong direction. And I think that in and of itself is probably the best indicator of where people are going to vote and where they're at. I think they're going to get shellacked. We're going to see. We're going to see. But a few other things. I guess the biggest thing I should say about this Inflation Reduction Act is, it's going to, like I said earlier, it's going to raise taxes on literally everyone, folks. And you're going to have more IRS enforcement by a doubling of the budget for the IRS. They're going to be hiring new agents, more enforcement, more audits, which means likely subject to more taxes, penalties, or anything else for that matter, whether or not you did anything wrong, whether you filed your taxes on time, paid them or not. Particularly your self-employed person is going to be affected by this, your business owner, because they have deductions, business deductions, legitimate tax business deductions, that the IRS, when they come after an audit, I've seen this many times with many clients, when they try to get a business, for example, do an audit and want them to collect more money, and when they can't find anything wrong, they'll just disallow business expenses, whether the business owner has receipts or not. I've seen it firsthand, folks, multiple times. They have to justify their time they spent on this business. And when they're wrong, they thought they were going to get more money out of this business, and they find out they're wrong. Again, the auditor, with little or no explanation, can just disallow expenses. Or say, you have these expenses, but I'm going to allow half of them, or whatever it may be, which then causes that business to have to pay more in tax. And it's typically affects small business owners because they don't have the time or the money or the sophisticated lawyers and CPAs to defend them from this, and the IRS knows it. So they end up just having to pay it more or less in most cases to make it, quote unquote, go away. Folks, this is no different than extortion. This is Gestapo tactics. This is a country where we are supposedly innocent until proven guilty, but with the IRS, it's the opposite. You have to prove yourself, you're guilty, and you have to prove yourself innocent. And I've seen oftentimes, even when you do, they still don't accept it. Your personal bank.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. As you've been listening, I've been talking about the Inflation Reduction Act, how it's been passed. It will increase taxes on literally everyone, and businesses too, individuals and businesses. Taxes are going up, folks. You need to start really looking at alternatives, creating a tax-free bucket of money to help diversify yourself and help protect yourself from these higher taxes that are indeed coming. I got to apologize on the last segment. I came up on a hard break. I was on a roll. Didn't realize I was there. And what I want you to understand is I'm getting asked all the time what to do. Well, first of all, for the short term, I've stated this several times, you want an interest rate sensitive asset when interest rates are climbing. Your Personal Bank is one of those. It's a dividend type of account. It's 575 dividends, and all the companies are stating the dividends are going up. And the way the Federal Reserve is raising interest rates, we fully expect dividends to be on the rise for the next several years at least. Historically speaking, in a normal interest rate environment, the dividends are like 6.5% to 8%. That's the norm. In fact, to put things in perspective, In the late 90s and early 2000s, which was the last normal interest rate environment we've had in this country, all the companies were paying 7, 8%. That was the norm. All the good dividend payers. Okay. So if the Federal Reserve keeps raising interest rates the way they are, we're going to be rapidly entering those rates again. Okay. We're quickly moving towards that. So again, it's on the upswing. And like my mortgage broker friend, who's a client I talked to today, stated, yes, when interest rates change, especially when they change so dramatically like we're seeing now, there are winners and losers. Your personal bank's one of those winners. It's one of those where their profitability on their portfolio, on their investments, has already more than doubled this year, just in 2022. And again, on the new purchases, on the money they're investing. This is straight from the CFOs. They're getting a higher and higher rate on the bonds that they're purchasing because interest rates are going up. And they've gone through the worst 12 years, the lowest interest rate environment in the history of our country. So for many of these companies that have been around for over 100 years, this was the toughest financial environment for them to exist in. In other words, for about half of my career, dealing with insurance and dividends, and even that applies to annuities too, by the way, it was the worst period in the history of the industry. Think about that a minute. If you understand buy low, sell high, one of the common mantras of investing, we are coming off of the lowest lows in over 200 years. And it doesn't look like anytime soon that inflation is going to be dramatically reducing, because the root causes of that inflation, too much federal spending and energy costs, nothing's happening to reduce those. So in other words, they're going to keep exacerbating inflation, aren't they? Which means interest rates are going to continue to be higher than average, certainly, probably much higher than average. The Federal Reserve seems committed to trying to stop inflation. But the reality is, the root causes, the spending and the energy policies aren't changing. So even the Federal Reserve has even stated they in and of themselves cannot stop inflation. It's going to be interesting to see what happens. But my point is, we fully expect to see increasing dividends for a number of years. And depending on how high the Federal Reserve goes and how long they keep it there will determine more and more of that. Hey, we're already at 5.75 insured, guaranteed, and tax-free dividends right now after the 12 worst years over the last 200 in terms of inflation and interest rates. So where's it going? And then when we add on top of that, like I said, we have the lowest borrowing rate on money available today. We have a 4% borrowing rate. Folks, you cannot access or borrow money today on a 30-year fixed mortgage at 4%. You can't do it. And by the way, to clarify, I have a client that said this is 4% annual borrowing rate. He's a real estate investor, and he's used to borrowing hard money. And in many cases, that's double digit. And you got to pay a couple of points to borrow it. And then when he found out that he could borrow money at 4% annual with no points, he was ecstatic. In other words, this is the cheapest money in town to access. And if you do, let's say, earn a 6% dividend, and I think that's being conservative, especially starting this next year, and you access the money to supplement retirement, purchase items, pay off debt, whatever, I don't care what you do, invest in other things, you're still picking up a couple of percent positive arbitrage. Doesn't that mean you'll have more money in your pocket? And if inflation continues to rear its ugly head as it's been doing so, and frankly, probably will for a while, doesn't your money need to go farther? Don't you need to enhance the rates of returns on your money? Well, one of the best ways to accomplish that is get positive arbitrage through your personal bank policy. Again, if you're earning 6% on the money and you access it and it costs you 4, you're keeping the difference, the 2%, aren't you? And if you're taking that money and investing it somewhere and getting a return, great. You can add another 2% to that return. And some people will say to me, well, that's not very much, 2%. For one thing, that's each and every year for the rest of your life. So in 10 years, that's 20% more money without compounding, right? But secondly, if your rate of return on some other investment happened to be 10%, and I think most people today would agree that's a good, strong rate of return. Well, if you can move it from 10 to 12 by adding the extra 2% positive arbitrage your personal bank offers, well, you just increased your rate of return by 20%. And folks, you talk to any business owner, any CFO, CPA, or any other financial person like that, any financial advisor, and you say, look, we're going to add 20% profit to your bottom line, 20% return on investment to your bottom line. Folks, those turn into huge numbers. This isn't small. This isn't insignificant. This is massive. This fundamentally changes people's financial futures. It really does. And because of the economic chaos that we are dealing with at this point in time, it's really more important than ever. And as I've stated several times, just even on this show, with the federal government spending more, continuing to spend more money, more than it should, it's going to keep continuing to exacerbate inflation, which means we're going to have higher than average interest rates, which means we're going to have higher than average dividends. Okay? So actually, again, I'm not all pessimistic. What I'm trying to, like my mortgage broker friend said, when the economy changes, when interest rates changes, there are winners and losers. Folks, what worked last year probably is not going to work next year. Our economy has fundamentally changed. We are in a dramatically different economic situation. Your actions, what worked again, what you were doing, we get, it's human nature. We get into our comfort zones. I get it. I understand. But I'm trying to help people understand and wake up and realize you need to act. You need to change your direction. Okay? And you need to improve your rates of return. You need to make your money go further, and your personal bank will help you do that. A few other thoughts while I wrap this all up, because I'm not, again, all totally pessimistic. And I guess, let me finish with this thought, I guess. And I've shared this with so many of my clients, so I'm going to share it with you. And, and before I forget, if you know anybody in Seattle, I'm going to be speaking to the Renatus Real Estate Education Group in Seattle on September 10th. So in Seattle, September 10th, contact me at yourpersonalbank.com or toll free 866-268-4422 for more information, times and location. And it's free. Be happy to attend, and I'd love to meet you or whoever you recommend. And I'll be sharing the Your Personal Bank concept, some of the updated stuff, and some things I don't get the time to share on the radio show. But one of the things I have been sharing and why Your Personal Bank is so powerful, and I shared this with a young person again today, is you can put the money into one of these, and depending on how we set it up, you can have access to like 85% of the money day one. As I've stated earlier, you can be earning, say, 6% dividends and accessing the money and getting charged 4%, so you keep the difference and take advantage of opportunities. See, when we're in economic chaos, opportunities present themselves, don't they? See, it's no secret the stock market has had its worst first half of the year since 1950. Folks, that's the worst in over 70 years. I'm not convinced personally that it's at the bottom, and many others are saying the same thing. In fact, a week or so ago, Goldman Sachs themselves even stated they expect another leg down. the markets are not done? I don't know. We're going to see, aren't we? Nobody really knows, but it's a pretty good likelihood. I think they're probably right. So would I go in and buy everything left and right now? Probably not. But what I'm getting at is there's a point in time when you're going to see opportunities that are too good to pass up. And that could be in the stock market. That could be in the real estate market. It could be precious metals or cryptocurrency or anything else for that matter. Any asset you can think of, anything of value. See, economic destruction and economic change like this creates opportunities. Now, who takes advantage of those opportunities often are the ones that become wealthy. What I'm getting at is if you're fully committed to riding the roller coaster, riding the ride, and you don't have dry powder, as they say in the term, you don't have funds available that you can easily access and pull the trigger on an opportunity where you see an asset where you look at that and say, gosh, it might go lower, but that's just too good a deal to pass up. If you don't have the ability to pull the trigger because your portfolio lost too much in value, you lose those opportunities, don't you? So in other words, my advice for most of my clients has been stack cash, stay ready, earn some money on the way, and when you see that opportunity, pull the trigger and get positive arbitrage while you do it. If you want to learn more, contact me at 866-268-4422 or yourpersonalbank.com. You see, again, it's that ability to access a majority of your funds at any given time without tax consequences, without any penalties, without worrying about did you lose 10, 20, 30 or more percent, and you've got to wait for it to come back before you can take advantage of the opportunity, which oftentimes means at that point it's too late, right? You have to have access to ready capital. And I know some move to cash and they sit on cash. The problem is, especially in a high inflationary environment that we're in right now, let's assume the consumer price index is right and it's 8.5%. Well, that means you're losing 8.5% a year on your money if it's sitting in cash. At least if you're earning 5.75%, 6%, you're losing, but not nearly as much. Plus, you can take advantage of those opportunities and get that positive arbitrage with you. Again, contact me, 866-268-4422 or yourpersonalbank.com.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. This show is designed to provide accurate and authoritative information. The presenter and guest on this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Products and riders may have limitations and may not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Compare when considering a replacement. Dividend rates and baseline of credit rates may change. Contact yourpersonalbank.com for current rates.